So I realize that the street is not responding very well today to the numbers, but just to put it into perspective, record results, and at $7.28 a share, this almost matched your full year earnings record of $7.42 back in 2018. I mean, we've known that steel prices have been on fire this year and that the market has been very strong. How sustainable is that, not only going into the fourth quarter, but into 2022? What do you see when you look out over the coming months?
Yeah, I couldn't be more proud of our team, Morgan. First, in the safety and health and well-being of our team, we're on pace to have the safest year in our history. But as you pointed out, 728 reflects the strongest quarterly performance in the history of our company. And so, as we indicated earlier, we anticipate that Q4 could be as good or even better in setting another record in the fourth quarter of this year. So the end market demand in our customer segments that we serve remains incredibly robust. We see that continuing well into 2022. So again, I think there are a lot of positive indicators, and certainly some, as we talk about supply chains and others, that certainly could be some headwinds as we think about manufacturing in the United States.
Yeah. So is it safe to say that you see steel in a prolonged cycle? And I ask that because a couple weeks ago, Goldman Sachs came out, downgraded steel makers, including Nucor, and basically said that they see the market maybe anticipating a correction in the coming months as additional import volumes arrive, new capacity begins operations. You think that's wrong?
You know, what I think is there's been structural changes in our industry. I think the supply-demand will ultimately dictate pricing, but the supply-demand picture, particularly supply, is much different than it was over the last 24 or 36 months. It's much more leveled, and as we are anticipating and seeing today higher highs, we also anticipate higher lows. So there may be some corrections, Morgan. I don't think we're going to see the drop-off, and I think that's one of the things that the analysts have got to continue to watch, and Nucor's got to continue to perform. And as the most profitable steel maker in North America, we're very confident that we can continue this.
Yeah, in terms of capacity, you're putting $2.7 billion to work on a new state-of-the-art sheet mill that's going to be, it looks like, in the Appalachia region. What is that going to enable the company to do?
You know, we're incredibly excited about that investment. Look, we are a growth company. We're going to remain a growth company. Part of that is going to come through organic growth. The greenfield announcement of a $2.7 billion sheet mill is going to reflect pieces of that. It's going to differentiate ourselves in being in the largest sheet consuming region in the United States. And the customer segment that we serve needs and wants this. Wants it from a cost position, but Morgan, also from a sustainability position, generating the cleanest steels in the world. And Nucor is on the front edge and leading edge of that. We've just announced a brand of family of products called Iconic that will offer net zero products to our customers that need those to deliver net zero targets for their end use in their companies, like General Motors and many others.
Leon, in a lot of categories where there's been tight supply and prices have been going up, there's been some sense out there that customers are kind of incorporating this into their planning and their mindset and double ordering and pulling forward more than they need in terms of supply. Is there any risk of there being a little bit of a cliff out there as supply rationalizes, or are you seeing actual true organic demand mostly in your customers?
Yeah, that's a great question, and it's something, really all year we've been very active. And one of the things that I would tell you that reflects that we don't see that is the relationships we've built with our customer segment over the last 20 or 30 years. So we really have stayed very close to understand their end markets and how their end customers are using the steel. And so I think while there could be some of that, we think that's a very small percentage of the overall backlogs that reside in Nucor today.
Yeah, we have these spending bills that are making their way through Congress right now, whether it's the infrastructure deal that's been long anticipated, or whether it's even the clean tech and green infrastructure component of the reconciliation bill that's getting hashed out right now. If we see those materialize and actually make their way through Congress, what does that mean for Nucor and for steel demand domestically?
Yeah, I think it's going to be a huge boom for manufacturing, and quite frankly, the infrastructure bill is something my predecessor and his predecessor have been advocating for, and we're going to be tireless in advocating that Congress bring this to the floor. It's long overdue, and again, the U.S. can ill afford to wait for a bridge to collapse, a dam to fail, for lives to be lost before we rebuild the roads and bridges, waterways in this country. We're still driving on roads and bridges that were designed during the Eisenhower administration. It is time that this bill comes to the floor. And again, as we think about rebuilding and building back better, who did better to do it with than the cleanest steel makers on the planet? It is a huge opportunity for manufacturing, and not just steel, but many segments of our economy that is long overdue.
Yeah, I don't think a lot of people realize how integral steel and certain types of coal are to the clean tech future we talk about as well, and the manufacturing of some of those products. Finally, just the conversation we're having, the fact that we are seeing such strength right now in this cycle in steel. How much of this is what we've seen, the dynamics around the pandemic and industrial-led recovery in this recession versus some of the groundwork that was laid with things like tariffs a couple years ago?
You know, look, I think the underlying demand is incredibly robust. It's strong across every market segment that we supply to. So I think that demand is real. There's a lot of confusion that 232 is artificially propping up the steel industry, and that's simply not the case. The things that we think and have put in place in trade are much longer term. And again, 232 at some point will go away. We understand that. What's in place to prevent the imports from coming back into the United States are things like winning trade cases with the ITC that levy any dumping margins and countervailing duties that are in place for 5 years. So again, the demand picture as we move into 22 is strong. And again, Nucor feels incredibly well positioned to serve this market and the opportunities that it'll expand. You know, in autos, as we think about semiconductor chips, when that subsides, the boom in auto is going to be huge, and Nucor's new investments and continued investments at our mills are going to be able to capitalize on that and serve that end-use market.
All right, Leon Topalian, Nucor President and CEO, thanks for joining us today.
Thank you very much. Appreciate you having me.